No one told me that there was no music. No one told me that there was no music. Does that mean we got to start the whole thing over again? Is that what that means? Looking mighty red. You didn't say there was no music. You didn't say, hey, David, no sound. All I see is LBC. You were being patient. Mm-hmm. Mm-hmm. Were you paying attention at all? Or were you over on Billy Goatels? Oh, what's going on, guys? Yeah, we're just doing a stream. We're doing it live. Here, let's just go ahead. Let's just throw it on in the background. Bing, 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 bing. All right. It's too loud. What's going on, everybody? How you doing? Welcome to Lunar Beaches Crypto. We ride the waves of the crypto market all the way to the moon. What's going on? Okay, so you're slacking and deflecting. Thank you. So yeah, I am deflecting. I'm putting it all on you guys. How you doing? Hope you're doing well. Hope you had a fantastic Tuesday. We are going to go look at the charts. We're gonna. I think it's pretty boring. It's like watching paint dry. So I think maybe we'll just go over some trading stuff tonight. Like, I don't know. I didn't plan the show. It was just like, it's not even really a show. It's just, I just come on here to stream. So maybe I'll just like look at charts and just talk out loud as I'm looking at the charts. That music seems like it might be a little too loud. Alexandra G is throwing in some emojis. So yeah. Just look at some charts. I want to go over something that Piper shared on Twitter. Maybe we can start off with that, and then yeah, we'll go from there. So yeah, we'll just look at things and charts and stuff. And if you guys have any requests, if you need me explaining market structure, fair value gaps, order blocks, support resistance, trend line, I mean, whatever, let me know in the chat and I will be sure to go over it. I'll do my best. What's going on, everybody? Let's go ahead and say good evening to the few people in chat. Of course, the amazing, the magnificent, the mod god. Oh, man. The mod queen, the mod boss, the mod god. Alexandra G, thank you for being here. Alexandra G, Trade Intuition, my brother, thank you for being here. T.I. Joe in the house. Harp throwing up the metal horns. Thank you. Thank you. We love the metal horns. And All Set. What's going on, All Set? Thank you all for being here. I do appreciate each and every single one of you. You are all beautiful, beautiful people. All right, so Piper shared this on the Twitter. Let's retest 112. Let's effing go. Yeah, probably. We'll see. So Piper shared this. Everything is fine. Pay no attention to the fact that global CTAs are set to sell everything over the next week, regardless of up, down, or flat. Now, me, being the normie pleb that I am, well, I guess I wouldn't say I'm a normie, but definitely a pleb. An uneducated pleb. Economically uneducated. I mean, this is deep stuff right here. So I had to chat GPT it. I was like, what is this? And does it mean the market is effed? Okay. So the CTAs, so these are charts from Goldman Sachs. Let's make that bigger. charts from Goldman Sachs. I'm sure Piper's going to go over this tomorrow, live on stream. Why is an old stream playing? Stop. So these charts are from Goldman Sachs global CTA estimates, which show projected outflows, buys and sells by CTAs based on how the market moves in the coming days and weeks. The top chart, over the next 1 week, flat market minus basically 20 billion, up market minus 5 billion, down market minus 54 billion. So essentially, you need the market to move to the upside in order for it to be less of a hit, it looks like. Over the next 1 month, 33 billion if price just stayed flat or tape stayed flat. If they go up, 27, almost 28 billion. If they go down, minus 234 billion dollars. The bottom chart over the next week, flat. Plus, this is for the S&P specifically. This is for global CTA estimates. This is for the S&P. Flat 2.94 billion, up 2.69 billion, down minus 11.53 billion. Over the next 1 month, flat 13 billion, up 14.68 billion, down minus 76 billion. So obviously we need the markets to go up. What this tweet is sarcastically saying, nothing to see here, because even a flat tape results in net CTA selling over the next week/month. If things go red, it could trigger massive mechanical selling, especially with August-September seasonality being weak historically. It's a kind of quiet setup where retail gets blindsided while the machines unload. So, there's that. What did I say? Oh, yeah, I said, so the market is effed? That's what I asked ChatGPT. So the market is effed? Short term, there's definitely a setup for a sharp sell-off. Long term, not necessarily, but the next few weeks, they could get real dicey real fast. Let's break it down. Why it might get ugly soon. CTAs, trend-following quant funds, are sitting on billions of potential mechanical sell orders. The Goldman chart shows that even a flat market triggers selling, and if we drop 50 to 230 billion dollars in global equity outflows could hit over the next month. September is already historically weak. This adds fuel to that fire. The market's been floating higher on low breadth AI hype and soft landing hopium. Got a little dyslexic there for a second. If those crack, the bottom can fall out fast. But don't panic, sell everything. Here's what to know. This doesn't mean a crash is guaranteed. Markets could chop sideways or even fake rally before puking. If strong economic data or earnings come in, upward momentum could delay or mute the CTA selling. CTAs are reactive. If price doesn't drop, the full sell triggers may not activate. Big money usually uses these pullbacks to load up. When the CTAs finish selling, liquidity and dip buyers often step in. The worst flushes can create some of the best buying zones, especially if you're longer term. TLDR, we're not doomed, but the setup is tilted bearish AF for the short term. If we drop, CTAs could amplify the fall. Stay sharp, manage risk, don't trade like it's still July. So there you go. There you go. Please talk about FEG. How they work. How strong are they? Are they stronger than OB? That's all depends on the setup. So I'll actually go over. I'll go over a strategy that explains that. So yeah, these CTAs look like they're could be creating some selling pressure. So what's that document? Go back about 5 minutes, and I go over all of it, Kelly. But thank you for being here. Buffering? Buffering? Are we buffering? Hello? Let's see. Let's pick a different chart. I want to start off clean, get off of this. Turn this off. Just me. Carry on. Oh, okay. All right. So now, interesting to note that the worst number on that, more important to note, the worst number on that was minus 234 billion. But that could trigger something bigger. Because that's just how much it would. Yeah, so anyways, I've had 2 sufferings and a blurry feed. 2 sufferings? That's not good. We coming down. That's the end of the day's document. Yep, that's it. Piper will break it down probably tomorrow. So make sure you go over to the Piper Academy and hit that subscribe button and hit that notification bell so you're notified when they go live tomorrow morning. It will be important data to watch. Check it out. For me, what's the charts telling me? We'll see. All right, so pulled back to the 0.382. Now, if we go from the bottom of wave 2, which I did and I do, we have bounced off of the golden pocket, but we have since come back down and have gotten below the 0.5, and it is now acting as resistance. Now, a reason why it dipped down, maybe even a quick wick down to the 0.786 at 108.974, a number that I don't think we can afford to get below. Because that could invalidate or would invalidate the potential D5 wave move that I have had outlined for a while now. So if we come down any lower than that 786, then we are looking at coming into the territory of wave 1, and then that's just not good. Bad news bears. Okay. So we want to get a bounce off of that 786 if we are to lose the golden pocket. Now, the reason why I say it might not be that bad is because if this comes down here and the RSI or our oscillators come down here, but they don't create a new low and they instead bounce and this bounces, well, what does that give us? Bullish divergence. Now, to confirm this, remember bullish divergences are early signals. Okay. If we get the bullish divergence, to help us confirm this would be the price moving up and breaking this swing high, internal swing high. So if we do that, that gives us a pretty strong confirmation that we are moving back to the upside, potentially. I would say most likely. So would not be surprised at all if we did come down here to 108.934. I don't know that we can afford to come down to the 106 that Piper is looking at, to be quite honest. Yeah. But I've seen stranger things happen in the markets. So, Melissa, one love in the house. What's going on? Hope you're doing well. Gotta stay hydrated. All right, so essentially, don't lose the 786. Now, we don't even have an early sign bullish divergence at all, so womp womp. It is what it is. Now, something that I was talking about earlier, so I was asked about fair value gaps. I do have a video on that. Please talk. Hold on. I need to close this. Oh, let me close this. That might help. Close this too. Boom, 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 boom. All right. Now I can see my chatola. Please talk about fair value gaps, what they are, why traders trade them, how they work, how strong are they? Are they stronger than order blocks? Well, like I said, stronger. It's all in context to price action when it comes to fair value gaps and order blocks. So let me just go over fair value gap. So a fair value gap is a 3-candle move like this one right here. You've got 1, 2, and then 3. Let me change the color on these. Yellow. Got 1, 2, and 3. And they create this little gap between the wicks of the first and third candles. We take a box, we put it on the wicks, pull that across, and there you go. You got a fair value gap. Now, a fair value gap is where you're going to have, well, let's just look at it. Let's take a look at the inside of this. So this is called a volume footprint. And we want to see what is in this fair value gap. So we have a point of control right here at the top of the fair value gap. That's the white blocks on this candle. That's where the most volume was within this candle, is right here at these white blocks at about 117,750. Now in this candle, we have a delta of minus 6.51 thousand. What that means is this, you have more sell orders than buy orders within that candle. Over here, we can see we had a delta divergence where we have a red candle, but the orders inside, there were more bullish orders than bearish orders. And that's how you get a green delta. A delta divergence, I should say. On the red candle, if it's a green candle and we have red delta minus delta, then that's delta divergence. So what happens within here is that we get an imbalance. And we can see between, at this price right here, way more sell orders than we have buy orders. Same here too. 3.47 on the sell side, K, 1.5K, 4.04K, 1.6K, 3.6K, 1.3K. So you see on each side of the market, someone's winning, someone's losing, or someone's buying, someone's selling rather. And then we have, at the point of control, we have a divergence. So where we had more buyers than we had sellers right here at this price, 117,750-ish. So what does that mean? Well, what that means is that we have buy orders at this price that did not get filled, because we had 3.94 thousand to 3.3 thousand. So we have roughly 0.64 thousand orders that did not get filled. There you go. So what does that mean? Well, price would naturally want to come back to this area to fill the remaining orders if they're still standing. And that's where the randomness of the market really comes in, It's because people pull orders, or they just pull orders, meaning they cancel them. So that's a volume footprint. That's how you look on the side of these candles. So we use fair value gaps as liquidity zones. This is where price is likely to come to because there's liquidity within that candle. And we know with the delta that we can see that we do on the point of control within this candle, right about at the top of the FVG, that there was more buyers than sellers. So we have buyers all the way up here. Market maker wants to do what? Sell high. If market maker wants to sell high, where do they want to go to where they know there's buyers? More buyers than sellers, so that they can come in, fill those orders, and then you get a shift down. Potentially, we could see. So fair value gap, essentially liquidity pool. Get rid of all this. There we go. Now, an order block is where you have more institutional activity, and you find these at like swing points. So if you get a high, then the last candle pushing to the upside, really the biggest candle in the last final move. That one will act as your order block. Push that across, and you can see did tag it once, and then it just price just got hammered after that. So lots of selling in these two candles right here. They're pretty big, and we just essentially came into those last two big candles, and it just kept selling on us at this price right above 118, 119. So they started selling at about 119, and that is when price fell. Buyers couldn't keep up, so price just keeps on keep on falling down. I need a BTC hat. I actually got this one for free. How's your XRP trade going? Who's in an XRP trade? Don't forget to hydrate. Man, I need to drink some water. It was one. Breaking the heat wave is a good thing. Oh, man. It's been such a beautiful week at work. It's nice to not feel like you're dying. Last couple of weeks, I would just come home and just lay on my living room floor underneath my fan and just, thank you. I'm not dying. I'm not dead. Oh, praise him. So, fair value gaps, order blocks. So your order blocks are going to come in at your swing points because that is where you'll see the most institutional activity. So this is an order block down here. This big sell candle down here. This is the last push down before the pivot and then push to the upside. So I want to take that candle. I want to draw this across, and there we go. There's a order block. So now so it really depends on the time frame in which you're trading, but not really so much. Like I said, it's all within context. It's kind of like an order block is essentially your last resort for resistance or support. That's basically it. And if you break one, then you create a breaker block, which then gets used as support or resistance itself because you smashed through institutional orders. So if you break through institutional orders or just massive well orders, then that is a sign that level has now become it's now flipped. Okay, so it's like that's why I say it's support or resistance. So now it has flipped. So Order blocks, really best used at major swing points, not necessarily internal swing points, but major swing points. Internal, so major swing points being, okay, this move up, this move down, this move up, this move down, wherever this is going to end up. This might turn into a running flat, guys. I'm glad I just drew that. Hold on. Sorry, squirrel moment. It's possible. So a running flat looks like this. Let's go ahead and draw it out. I guess I didn't have to do it that big. Jeez. Path pattern tool thing. Yeah, so price comes up into it. Hold on. Can't see it. Yeller. There we go. Price comes up into the new range that it's going to create. You put in a low, you come up, you take out the high, and then you come down. You don't put in a new low. You don't tap the new low. You come up short, and then you continue higher. That is a running flat. This is a standard flat. And then this is an expanded flat. So you typically get one of those three variations. Not typically, but you can get these variations of corrections mostly on higher time frames. Brutal heat dome. What's going on? Army Piper. Army Piper's in the house. Alexo Crypto. Todos otters in the chat. Thank you for being here. Put the army helmets in the chat too. Thank you all for being here. Absolutely appreciate you. Alexo with the blip 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 blip. Blip 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 blip. The forbidden water. Not allowed in the chat. Alexandra, ban him. Ban Alexo Crypto from my chat. He's put the forbidden water in there. How dare he? Piper, I went over your CTA post. I went over CTAs. But I told everybody that they need to go over to the Piper Academy tomorrow morning because I'm sure you will talk about him. If you didn't talk about him today. I don't think I heard you talk about him today. But, yeah, I don't know. Alex, so Crypto knows. I was there, bro. I was there. Graduation caps. So, yeah. Running flat. And that is what we might get right here. With the move coming up. Turn the magnet off. Push down. Push up. Come down. And then go. Potential. That is potential. That is the one scenario that I would say that breaking 106K or breaking that 108 level rather, where this was a 1, 2, 3, 4, 5. If this is invalidated, the way for that to get invalidated is for price to come down into the territory of wave 1. So, if it does come down, then I would have to reconsider that this might be a running flat correction. If we don't get a bounce here, we are screwed. It is over. Pack up your bags. We're going home. Try again next year. Have not tomorrow's show. How many content creators are going to slide in to LBC party? Well, at least 3 of you. Have not tomorrow's show. What? Is this even English? You have not. Oh, you haven't gone over it. Gotcha. Gotcha. All right. Potentially, maybe. If that's the case, then I don't know. I don't like it because it's coming off of this. That would be a really weird wave 2. Not necessarily. That would make a 5-wave impulse actually pretty freaking massive. 1, 2, 3, 4, 5. Throw some extensions on it. We're going to bring that down. Full fib extension? No. 2.618 at 143K. 171K. It's ugly. That's prettier. Nah, I don't like it. I'm getting sidetracked. I was supposed to do other stuff. B-Team Crypto, what's going on, my guy? Hope you're doing well, my friend. What makes a move valid or invalid? You were talking about pattern might be invalidated. If you mentioned it, can you say it again, please? Yeah, so 25% of LBC live viewers are other content creators. We are here to steal your charts. All right, fine. I'm not sharing any more charts. We're going to go to news, something that I'm really good at. Tron Network founder Justin Sun returns from space. What? Did he go on the blue thing? Justin Sun, founder of the Layer 1 Tron blockchain network, returned safely from a commercial spaceflight on Saturday alongside 5 other crew members aboard Blue Origin mission NS-34. The other crew members included the founder of venture capital firm Alpha Funds, J.D. Russell, entrepreneur. Shouldn't this guy like be in jail? Wait, did Trump pardon him? Earth is so small, it's our home. We definitely need to do whatever we can to protect it. I was very surprised. Earth so small, basically we could almost see the entire thing from window. And that's when it came to me. The mission's name is right on point. Is that racist? I don't care. I'm not monetized yet. Thanks, Alex, for liking the video. I appreciate you. Mountain time zone is where it's at. Oh, you're in the mountain time zone. What is that? I think that's 2 hours behind me. So it's like 7:30? Yeah. Yeah, because Army was 2 hours behind me. And then he moved. And then he's only an hour behind me. That's pretty dope. Love you guys. You guys are awesome. Thank you for being here. So yeah, trend invalidation or invalidating a pattern, whatever it may be, essentially it's just oh, look at that. It actually looks even better than it used to. Minus 2 hours from Eastern. Yep, it's 8:30. Awesome. I wish I was an hour behind or 2 hours behind where I'm at right now. All right, so let's just say we've got a bull flag here. We pull a measured move. We put it on to potential breakout. That gets us up to 134,000. What if we came down here? Sweep relatively equal lows. 107. Do have imbalances down here, which means we could come down there as well. Anyways, so if price is to come down and break below, close below this trend, then this pattern becomes invalidated. And we have to look for something else. Trend, price moving to the upside. Okay, sweet. If we break this low, are we invalidated? Sun is hiding behind a mountain. Y'all are throwing me off. I gotta stop looking at the chat. How does Alex do it with 300 people watching? I can't keep up. Oh, that's why you got to move the show to 2 hours long, because you got to interact with chat, but you have a lot in there. Y'all are funny. It's throwing me all off. What was your question? Let me come back up here. What makes a move valid or invalid? A move? I might have misspoke because I'm not sure. A move, valid or invalid? Well, so I'm doing Elliott wave theory on this where I'm pointing out 5 waves. Whoops. How about I just use the actual 5 wave? 1, 2, 3, 4, 5. Okay. Now, in order for this 5-wave impulse to become invalidated, we have to come down into the territory of wave 1. That is how 5-wave impulses work. So this is wave 1. Okay. You come up, you come down, you correct, ABC correction, and then you get the next move. So that becomes an area of demand because we pushed off of here. If you are coming down, 1, 2, 3, 4, and 5, this same area would then become resistance or supply because you are pushing prices coming down and we are breaking lows. Okay, that's the important part. We're breaking lows in here. So when you break the lows, your trend is intact. It is still valid. Once you then come back up and break high, you are now shifting your market structure. And then if you create another higher high, then you also create a higher low. And now we can confirm that most likely we have a reversal in trend. But it also is in context. So, like, sorry. My eye is itchy. Price coming to the upside, we get an A, B, C. Then you get this move up right here. Now, what I'm looking for in this moment is for price to come down, put in another low, and then push higher. Now, what would invalidate that is if it came down and it took this internal low in here. If it comes back and it takes this internal low, I'm going to look for price to keep going to take out this low as well, because obviously a breakout, so this would be a break of structure, but it could be weak. So if the break of structure is weak and the bulls fail to push price higher, and they come back down and instead come below this low, then you look for price to go even lower. I don't know why I've got it like that, but I got an extra leg on here. So you look for price to come down lower in that instance. And you might be in a bigger pullback, a bigger ABC pullback. If this, then that. So it's all just market structure, highs and lows, breaking highs, breaking lows. That's the biggest thing. Any area where you have a broken high or a broken low, pushing to the upside, push to the downside. Okay. Any area where you have a broken high or broken low, you can use those areas as support and resistances. Over here. So oftentimes you will see something like this where you get the 5-wave move to the upside and then you come down. You don't tap. You come close to tapping that one and then you just continue to push to the upside. Especially if it's a 5-wave impulse, because then it really can't come down in here, but it can continue higher. Now I'm confusing myself a little bit, so let me just stop that right now. Any other questions? You explained it well. Move equals thought process on patterns, for example. Really liking all the explanations. Yeah, man. My igloo stays nice and solid now. Awesome. Got to sweep the lows. Yeah, that's what I was going to say about the context. It is in context. Thank you for that, Kelly. So if price is moving up, and let's just say you got to move like this. If you sweep this low, see, most people look at this and they think, all right, we are break of structure. We broke this low, but they forget about what? This low. This is the main low. Okay. This is the one that we cannot cross. We may not have reversed. All this might be is a pullback, because on the higher time frames, this is part of a larger move. So if we come down, we can still break both of these internal lows and still be fine and reverse back to the upside, especially on lower time frames. Higher time frames, these levels are going to be, should be stronger. But lower time frames, oh, this will get swept all day. Okay? Because where are people placing their long stop losses? Here and here. And here. So just because price is moving to the downside and just because it breaks an internal low does not mean that it won't reverse and continue back to the upside. In fact, it might have just been a liquidity grab so that it can push higher. So what you are typically looking for in this instance is areas of liquidity and inducement. So for an example, let's say price is moving up, then it comes down, smacks that, smacks it again, and then it continues higher. What did we just create? Equal lows. So we look, that is going to be an inducement area. Extra points if there's a fair value gap that broke this high. Okay, fair value gap that broke this high, and a fair value gap was created. Have price come back down. We can look for this area to be our support area for a bounce, and then we can long from there and aim for the highs. And it's the exact same thing for sales, except inverted. And that be it. Very common pattern. You've seen this one before, right? What's usually happening in here is you'll have an inverted fair value gap, which is when one fair value gap pushes through another one on the opposing side. So if you have, these are actually really good levels for support and resistance, is when you have an inversion fair value gap. Let's see if I can find one on the chart real quick. Let's go to the 15. Let's see if I can find one on the chart. Now I'm only looking for areas where highs are broken. And another key factor in what creates a strong fair value gap or not is whether or not there was is it inducement? No, it's an impulse. It's an impulse off of the lows. So it's a strong move. If you get a strong move, big candle like this, okay? I'm trying to find one quickly. Okay. Ooh, bad example. Fell right through this one. Well, we came up into it, so that doesn't count. It'll take me forever to find one. Maybe not so much on the 5. Let's see. Bada bing, bada boom. Bada bing, bada boom. Fair value gap. Fair value gap. No, I don't like it. Anyways, trying to find an inverse fair value gap so you can see what the heck it is I'm talking about. Here's one, but it actually pushed through and kept going. It actually didn't break it though on this candle. So, but I'm looking for something kind of like this where it's essentially, you see, we've got fair value gap here, and on the other side we have another fair value gap. I'm just looking for something where this is like this, where you create a fair value gap that encompasses the other one. You got a big move. If you see something like that, just go ahead, mark that level off, and check it out. Should act as a strong support or resistance zone. Man, look at this price action. It's just absolute garbage. I hate every single bit of this. What are you supposed to do with this? It's on the 5 minute too. Nice block. I love blocks like these. I call them blocks. I don't even know if there's like an official name for these. I just call them blocks. Whenever I see a strong trend get going, but there's one area where we had one candle come in, one opposite side of the market candle come in the middle and create kind of like a little block. You can see that acted as a support zone a few times. Right? I mean, you could have played it off of here up into this block. Look at that. That pushed down. Smaller order block down here. Last little candle. That was pretty weak. Notice how it's not that big. Pretty weak. We do fall through it. Come down. But we're digging into this block here. And then it goes all the way up. This is a pretty sweet little setup here. And of course, it's happening at 12:35 p.m. on a Sunday. Actually, the breakout is happening at 5 p.m. on a Sunday when the market opens. Oh, you got to watch that stuff too. Whoop, take out all the highs. Beautiful. So you're really just, yeah, so you're looking for a quick, energetic move, pushing to the upside on a fair value gap. Those are going to be your stronger ones. And I guess I'll just have to draw it. So when you come and you break up, the candle that breaks the high, you want that to be a strong move. You want it to be a strong push to the upside, because that is showing strength or weakness depending on which side of the market we're on. It's just easier to draw the bullish side of a market. But we can do the bear side too. So you create a fair value gap on a break of structure. You break the structure. You create the fair value gap on the break of structure. A lot of times that fair value gap will be a strong area. Now, sometimes it's not, because sometimes you have areas of inducement where you have liquidity resting above this other high up in here, typically in the form of equal highs. Come up, grab, come back down, and do something like that. So you got to be cognizant of equal highs and equal lows. They will wreck you. Here's some equal lows right here. So I expect inducement down below this low at 113, 141. Because we have the equal lows in here. We have this low in here. So I know what? I know that there are stop losses resting down here. I also know there's stop losses down here. So it's probably going to come down and take them all out. Because that's what the market does. Ooh, what an ugly, ugly chart. 1, 2, 3. It's more like 1, 2, 3. Break the low, 4, and then 5. Actually, it looks pretty good to me. 1, 2, 3, 4, 5. A, B, C. 1, 2, 3, 4, 5. Nice crashing structure. I haven't even looked at Bitcoin to look for a crashing structure. Because I did notice one on XRP, but I haven't looked at Bitcoin. I don't know if 1, 2, 3, 4, 5. I mean, does this 4 come into wave 1? Ooh, that's tough. We're going to have to bring out the microscope. It did sweep it. Ooh. Okay. Or it did. Okay. Alrighty then. We might see some effery going on in here. Be cautious. See this big area here? Say big, but it's more like a thin area. Big push down. We have some relatively equal highs over here. We have fair value gap. Okay, I'll tell you why in a second while I said be careful, because since this isn't a 5-wave crashing structure to the downside, this could be playing out to be an ABC correction. So we got A, B, and then C to come down potentially lower. It's ugly, but actually this would be B, low, and then a high. Because you have an internal A, B, C. Push up. Man, that didn't even create an ABC. Interesting. So it's more of a flat-ish correction. I don't like it. All of this just screams ugly and bearish. But anyways, I want to be careful because we do have this liquidity up here. We do have these relatively equal highs up here. Let's just say we come down and we come up. We got to be careful about this move because that could just be an ABC. So because this is not a 5-wave impulse or crashing structure. I don't see, but I see the A, B, C in here. A, B, and then C. Coming down, taking out the low. But I don't see an A, B, C in here. If I go down smaller time frame, well, I guess you could go A, B, C. I mean, it's really ugly. It's not really impulsive, so I can't say it's impulsive. It's way more corrective. It actually might be an A, B, C, D, E, which is another type of, or W, X, Y, Z, LGBTQ, whatever. It's all Elliott wave stuff. Yeah, without context, it's hard to go over. But anyways, Jesus saves. You made it towards the end. Thank you for being here. I miss Mel. Mel's here, bro, all the time. You should come hang out now that you're at an earlier time zone. Wait, when are you doing your show? Are you going live at 5 in the morning? Wait, yeah, you'd be 5 in the morning. For me. For you. Wait. No, you'd be going at 9. Oh, so that's actually beneficial. I need to get into the mountain time zone, bro. This non-mountain time zone is for the birds. ETH is creeping up. Yeah. What, on the 5 minute? I like this. ETH looks better than Bitcoin right now. Come back into the range. Gotten a back test of the range lows. Could get a bounce. This looks like a perfect opportunity for a 1, 2, 3. 3s break highs. Okay. Third wave breaks high. 3, 4, and then 5. Wow. That looks way better than Bitcoin. And then Bitcoin could get that move to the upside, that fake out to the upside at the same time. And coincidentally, this creates an SMT divergence. What is an SMT divergence? I'm past my time. This is going to be the last thing I go over. An SMT divergence is the smart money tool. It's SMT. Okay, SMT divergence. There's actually some free indicators. You should check them out. So an SMT divergence is when you have two correlating assets like BTC and ETH, highly correlated assets, I should say, like BTC and ETH, or like the S&P and NASDAQ, or the NASDAQ and Dow Jones. Two highly correlated assets. So let's go split screen. And then there we go. So let's say, so Bitcoin is looking like this, and then it's coming down, okay? And then it's coming back, potentially trying to come back up for a little bounce, okay? Ethereum at the same time is comes up with Bitcoin, comes down with Bitcoin, but then comes up and breaks the high. But Bitcoin comes up short of breaking its high. So what does that tell us? That tells us that there's a divergence between these two highly correlated assets. And this is actually sent it as a divergence on the top side, like this and like this. That is an SMT divergence, and that is a bearish SMT divergence. So from that, I would expect price to move to the downside. Let's go over, let's try to find an example. This one should be easy to find an example on. Let's go over here, do this. Here we go. What do you know? All right, so let's do Bitcoin and ETH. See if I can find an example real quick. Let's just go down to 4 hour. Come here. Come here. Thank you. Wait. Sorry, I gotta make. Yeah, that's fine. All right, let's see. Let's see. Hello, where are we? Okay. Here we are. Did we have one recently? That we did? Yeah, you got a little bit of one right here. So let me bring this down. Kind of got one here. Hold on. Bring this over. Down. Here we go. Crosshairs lined up. All right. So right here we can see, so we come up, you come down. Ethereum price breaks a higher high. Comes in, breaks a higher high. But at the exact same time, Bitcoin, where's this high? This high is over here. Wow. It's not even, it's way off. It's the exact same time Bitcoin's putting in lower highs. At the exact same time that Ethereum is putting in higher highs. And what do they both do after that? Down. Down. You have a divergence. You're not showing real strength between two highly correlated assets, which shows smart money is trying to push one to grab extra liquidity compared to the other. Anyways, you get that on both bearish side and bullish side. So on the bullish side, it's going to be your supports and your lows, and on your bear side, it's going to be your highs that don't match up, that diverge. So two highly correlated assets. I highly recommend you checking that out. Look at it on the lower time frames for daily, intraday scalp trades. You'll see it all the time. All the time. But I'm out of time. So. Okay, no problem. Jesus saves. I'll check it out. All right. Thank you all for being here. I do greatly appreciate you all for being here tonight on TA Tuesday. Oh, it's actually on a Tuesday? I mean, this is what we're going to do all the time as TA. So don't forget tomorrow morning to go over to the Piper Academy. Go ahead and go over there, hit that subscribe, hit that notification bell so you can be notified for when they go live. I've got a feeling you're going to want to watch tomorrow's Piper Academy morning market report. So make sure you go over there and check that out, because Pie Bear is here, and he's going to poop all on your hopes and dreams. Maybe not so much, but yes. All set. I don't know I think I called you out earlier, but if I didn't, hey, all set. But yeah, make sure you go over there. Make sure you go over and subscribe to these other guys too that have channels. Trade Intuition has a channel, and Alexo Crypto. Make sure you guys go and sub to them and hit that notification bell. And don't forget, if you are new here, hit that sub and that notification bell. And then on your way out, if you wouldn't mind giving me a like, I would greatly appreciate it. But with that, that is all I have, fam. I do appreciate each and every single last one of you. I hope you all have a great, great hump day, Wednesday. And I will see you all tomorrow night, right back here for another Lunar Beaches Crypto, where we ride the waves of the market all the way to the moon. Hope you all have an amazing, beautiful, wonderful, radical sleep. And I will catch you all tomorrow. Mad love. Peace out. God bless. Bye. We ride the waves of the crypto market to the motherfucking moon. Surfboard line, charts on deck. Crypto tides got no respect. Pullbacks hit like a lunar slap, but we catch that wick with a fib and a trap. Stars above, sand below. Charts lit up like a rocket show. No shills, no noise, just price and face. At the risk, hit play, levitate. We ride the waves, ride the waves. Crypto tides through the heat and haze. Rock to the moon, past the stars. Chart that zone, we know who we are. Wave game deep, no cap, no fakes. Stacking truth while the system breaks. Wave ride the waves, yeah, that's the call. One good setup, we risk it all. Phones on my skin, stars in view. Lunar tide, got the alpha crew. No guessing games, no tick-tock tips. Just clean PA and candlestick flips. Anchor the VW, use that line. Stochastic twitch, that entry's mine. From sea to space, from dusk to noon. We ride the wave, you chase the moon. We ride the waves, ride the waves. Crypto ties through the heat and haze. Rock to the moon, past the stars. Chart that zone, we know who we are. Wave game deep, no cap, no fakes. Stacking truth while the system breaks. Wave ride the waves, yeah, that's the call. One good setup, we risk it all. We ride the waves of the crypto market to the moon. Surfboard mind, charts on deck. Crypto ties got no respect. Pullbacks hit like a lunar slap, but we catch that wick with a fib and a trap. Stars above, sand below. Charts lit up like a rocket show. No shills, no noise, just price and fate. Set the risk, hit play, levitate.